Welcome to my class in GST. In this session, we will learn what is taxable event under the GST laws. Taxable events under the GST laws. Definition: an event, the occurrence of which necessitates the creation of a liability to pay GST is a taxable event. The occurrence of an event requires a dealer to create a liability to pay tax. Such an event is called a taxable event under the GST. Taxable event includes supply of goods or provision of services. The term supply acquires a wider scope under the GST laws. It includes sale, transfer, barter, exchange, license, rental, lease, etc. made for a consideration. For a consideration means for getting something in return, either in cash or in kind, in the course of and in furtherance of business. This is very important. An event to be termed as supply should occur in such a way that the event requires supply of something in return for cash or something else, and it should be in the course of or in furtherance of business. For example, if a non-taxable person sells a taxable item to another person, it will not be a taxable event. Let us now examine what are goods under the GST law. Goods include 1. All kinds of movable assets except money and securities. Securities means stock or shares. 2. Actionable claim. Claim on which a legal action can be taken. E.g., the sale of a lottery ticket. If the government does not make the payment to the winner of the ticket, he can take a claim, lodge a claim against the government and file a suit in a court of law. 3. Growing crops, grass or things which stand on the land and must be cut before being sold. Transfer. The transfer of stock by a company to its branches in other states is a taxable supply even though no consideration is involved. In this case, no consideration will be paid by the branch to the company because it is the company's own branch. However, if supplies are made within a state from a company to its branch, it will not be a taxable supply. Barter. When one product or service is exchanged for another without assigning a value to either, it is called a barter. In a barter, no money transaction will be involved. Take for example this. A doctor provides medical services to a lawyer and the lawyer in return provides legal services to the doctor. This is called the barter system of payment. Exchange. Unlike the barter system, in an exchange deal, one product will be exchanged for another as part payment. The remaining payment will be made in cash. There will be two modes of payment. One will be in kind and another will be in cash. I will give you an example to illustrate the point. Example: a customer buys a car from a car dealer. The price of the new car is rupees 5 lakh. In the exchange deal, the value of the customer's old car is fixed at rupees 2 lakh. In this case, the total value of the new car is 5 lakh less value of old car exchange 2 lakh. So the net payment to be made by the customer will be 3 lakh. But GST will be charged on the entire 5 lakh. License. It is the permission given by one party to another for the use of technical know-how, etc. This will be treated as supply of services. Lease. Both the financial lease and the operating lease will be subject to GST. Rental. Rental of vehicles, premises, etc. will be under the scope of GST. With this, I will wrap up this session. Thank you.